Agree Realty Stock, ticker symbol ADC, another famous monthly dividend paying stock. And this stock is down 11% on the 1-year chart, underperforming the SP500 big time. But as of lately, the stock is really getting some momentum since the beginning of October due to different reasons. And on the 24th of October, Agree Realty reported earnings with a small miss on FFO, but a beat on revenue, although both were almost in line with expectations. For the upcoming earnings, analysts expect a miss. And people love ADC stock because of multiple reasons, and one of the main things being the dividend. And I understand why, with dividend yields at 4.7% and of course the monthly payouts. So could this be the perfect time to buy ADC stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ADC do? Agree Realty Corporation operates as a fully integrated real estate investment trust, mainly focused on the ownership, acquisition, development and management of retail properties net leased to industry-leading tenants. When we dive in the most recent earnings report, we see a few interesting things, with 411 million invested in 98 properties, which is very nice of course. Net income per share was reported at $0.41, down 12.4% year over year. And to me this is a little bit of a problem. However, the most important numbers, FFO and AFFO, both increased 2 and 4% respectively. So that comforts me a bit here. ADC declared a monthly dividend that increased almost 3% year over year, which is also of course very nice. Another important number is the net debt to EBITDA. It was reported at 4.5 times. I preferred a range of 5 to 6.5, so there is a little bit of room to expand here. Before we continue with the investor presentation of January, I want to start things off with some basic information about the company. So Agree Realty is founded in 1971 and went public in 1994. In total, ADC has 2,135 retail properties in 49 states, totaling over 44 million square feet of properties. ADC has B ratings, which is a good thing, although I prefer A ratings to be honest. ADC has a strong focus on retail properties, as we know by now. Grocery stores represents 9.7% of the portfolio, while being the biggest tenant sector. Home improvement is sitting at 8.6%, and from there the list continues. To me, this diversification looks really good. And if we look at the individual tenants, we see that Walmart is the biggest tenant with 6.2%, followed by Tractor Supply with 4.9%. And again, the list continues, and I really feel comfortable with the diversification. Roughly 88% of the retail tenant properties tenant type have a national focus, while 11% are super regional. Only 1% is represented by franchises. And in here we see that ever since 2016 ADC has really been acquiring a lot of properties. And to me this looks pretty good. The only downside is that in 2023 the number is decreasing, so keep an eye on that. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADC is a 6.2 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 16.2, indicating they might be at their fair valuation. Later in this video I will show you my 3 price targets for ADC stock, so make sure to watch until the end. because price to FFO is only telling a small part of the full story here. And in the meantime, please let me know your thoughts on the current valuation of ADC. And I'm also interested to hear your thoughts in general on this company. Revenue is at 509 million, and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. We see that margins are going down in the long run, which is of course really disappointing, especially since it is really steady and consistently going down. To me this doesn't look like a one-time thing, but more like a trend. And keep in mind this is also happening since they are growing. EPS is showing similar trends as the margin and the revenue. For a REIT it looks pretty decent. Analysis expect that from here EPS gradually increases to $2.15 in 2028. Some years show higher growth than others, but to me it looks pretty good. For the revenue it is looking a bit more interesting, with at least double-digit growth expectations every year. And again, this looks pretty good to me. Return on assets is sitting at 3.4%, which is a low number for a REIT. Return on equity is also looking a little bit low. And the most important number, return on invested capital, is sitting at 1.9%, which is a low number again, even for a REIT. It is also lower versus the 5-year average, so that is something to keep your eye on. Current ratio is at 0.64, which is a low number for a REIT. Nothing special to mention here. Historically it looks pretty good to me. Right now Agree Realty has 2.2 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ADC has 6 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. And to be honest, this could be a potential red flag to me. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. To me this looks pretty steady. Shares outstanding are increasing, which is very common for a REIT since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.7%, which is a great number. And keep in mind ADC is paying monthly dividends instead of quarterly dividends. Annual payout is at $2.96 and payout ratio is at 74%, which is around the 75% average for REITs. The 5-year growth rate is at 6.25%, which is not too bad for a REIT. On top of that, they increased the dividends for 4 years in a row according to Seeking Alpha. But in here we see the dividend growth since 2012, and it looks like ADC has been increasing the dividends for more than a decade now, at a pretty decent rate as well. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow slowly from here. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare ADC stock with the overall market, in this case the S&P 500. Next to that I added national realty properties and realty income. On the 5-year chart we see that ADC stock returned only 30%. And keep in mind this is including dividends. They massively underperformed the S&P 500, which is sitting at 98%. But it has to be said that both NNN and realty income had a lower return versus ADC. On the 1-year chart it looks pretty interesting, with ADC returning a -8% versus the S&P 500 sitting at 23%. And again, the S&P 500 massively outperforms the 3 realty REITs. On the 6-month chart it is again the S&P 500 that is having the highest return. ADC is sitting again at the bottom of this list. On the 1-month chart it is finally the 3 realty REITs that are beating the S&P 500. So bottom line, ADC was beaten by the S&P 500 in the long term. However, the stock is getting some momentum as of lately. So could this be the perfect time to buy ADC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 10, 12 and 14% based on historical performance, their own outlook, but also because of the analyst. For the profit margin, I'm filling in 29, 32 and 35%. And for the free cash flow margin, I'm putting in 72, 74 and 76%. For the PE ratio, I'm putting in 20 since it is a REIT. And for the price to free cash flow, I'm putting in 15. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now ADC stocks is at $63. I hit analyze and we see a lot of green numbers, and since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $63. We have a mid price target of $75 and we have a high price target of $89. To me, the low to mid price target is the most justified here, indicating that this stock is undervalued. And please let me know the price target that you think is the most justified in the comments down below. My final conclusion on this stock is that I really love the business. I currently do own this stock and I have been having decent returns with the most recent dip in 2023, where I lowered my cost average. Most fundamentals look really good, and of course, as most REITs, they have a lot of debt. And this is also one of the characteristics of a REIT. I really like how steady the revenue increases, and with that most other fundamentals as well. From a dividend point of view, things also look really good, and I love the fact that they pay a monthly dividend. From a value point of view, it still looks like a great deal right now. In my opinion, they are undervalued, but the margin is something to keep your eye on. You don't want this number to decreasing in the future. For now, I will slowly add more shares of ADC throughout the year, and in the meantime I will be collecting the dividends and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.